Hi everyone, Derek Hansen here from vAuto and Cox Automotive with another installment of Live Market View for Q2 of 2024. There are certainly a lot of trends in Q2 that we want to cover happening in our industry. And so we've invited Aaron Keating, Executive Analyst of Economic and Industry Insights here at Cox Automotive, to work through those trends with us. Thank you for joining us today, Aaron.
So happy to be here.
Aaron, let's dive right in.
Yeah.
I'm hearing that sales on both the new and used side have remained robust, yet dealers continue to complain the one word that's a problem, profitability. They're seeing pressure there.
Yeah.
What are you seeing? What are the factors leading to those challenges?
I mean, certainly I think one of the biggest things we're seeing is supply. We've got inventory coming in. We're not used to seeing that for the last few years. And even though I want to say normal is nice, it's not at pre-pandemic levels. It's high enough to start making some of these OEMs a little bit nervous, and the dealer groups then, subsequently nervous as well. We're seeing Toyota and Honda, they're sitting below the national average by at least half.
Right.
But then you've got Stellantis brands, and you've got about 18 to 20 brands that are actually all sitting above the 76 average day supply.
Yeah.
And that is just going to start pushing down, pricing power with any of these dealerships. And in fact, we're even seeing that some of this inventory is building up at product that is 2023 model year. We all know that if you can't move that older metal, now you got newish metal and newer metal coming, starts to create a real squeeze.
Yeah, that's a real concern. And like what you said, I think is really important, right? Even with sales being relatively robust, days supply continues to grow, right? And there's more on the way, right?
Sure, yeah. 2025 models are still on their way in.
Right.
So we are starting to see discounts and incentives come. We're going to see some brands favoring that a little bit more than others. Again, Stellantis brands, you're going to see push up some of the incentives. You're going to see some of the segments get a little bit more money behind them if you think about anything that's full size, pickups, those types of things.
And that really fits well with what I'm hearing as I'm out talking to dealers. One thing in particular they're really focused on is managing incentives and promotions again.
Right.
We talk to dealers, they're using tools like Conquest to manage new cars to really make sure they have every incentive dollar on that metal, that they're advertising appropriately, that they're staying on top of which models and trims are selling best, so that to the extent they can shape allocation, they're really doing their part to keep the new car moving. So with all of that, Aaron, where does affordability come into play?
It's the key number one thing that everyone's focused on. And it's not just the automotive industry. Everybody knows prices are inflating, the higher interest rates. No one really knows what's going to happen there. And as we look at the car industry specifically, I mean, we're seeing dealers, some of your customers are coming in, $750 is the average monthly payment.
Yikes. Yeah, that's a huge growth.
Right? It's huge. And so we're seeing a lot better sales going on at the compact SUV and car segments because, of course, those are the lower priced cars. And we're going to see higher incentives and discounts trying to move the larger vehicles off the lot. And I think we're going to continue to have this challenge for quite some time. Although we are not at pandemic highs in pricing, we are coming down. So there is some good news.
Yeah, it's appropriate to keep that perspective, right? Relative to where we've been. I guess as you see all these factors unfolding, we're talking about affordability, talking about growing supply on the new side. Where do you see the flow-through impact with regard to used vehicles?
Well, sure. I mean, anytime your new vehicle prices are coming down, that's going to put some compression on your used vehicle pricing. One surprising area, if we at least want to talk about something that's going to help us a bit, we've got EVs. Used EVs are benefiting from a huge tax credit, $4,000 on the used EV, and their prices are a little bit lower here. So at least we're getting to see in that market that those are starting to move and get people into more affordable transportation there. But yeah, it's going to continue to pull down the pricing in the used car market. It's going to become more important for the dealers to really look at what their return on investment needs to be.
Yeah, I'm so glad you mentioned return on investment. I mean, that's one of the key focuses for us at vAuto this year with Profit Time is really what we call a variable management philosophy, right? Really focusing on the return of each individual VIN, knowing which cars are earners and which cars are turners, right? And to the extent that you can stay on top of that with discipline, you can increase both volume and gross, but it takes that discipline and really holding the line with regards to the strategy for each vehicle. And it's so important as we look ahead in used. One other challenge I'm hearing as I'm talking to dealers with regards to the impact to used, as we were speaking to new and the dynamics with new car, is over allowance, right? Was recently with a Honda dealer, and the used car director came to me and he was telling me about how they have a real challenge that their over allowance is creeping up, and to the tune of $1,000 per vehicle on average last month, in an effort to really gain market share and recapture some of what was lost during COVID, to have to take that accountability where we're already seeing compression on the used side, right? Is there any relief? Obviously, he's working with his dealer trying to get that allowance put on new car. We'll see how that goes. You and I both know there's not very good odds of him changing that behavior. What do you see as far as the dynamic there of how do we continue to help them push from a used perspective?
I mean, a lot of the things still come down to who's in the market and how much can people afford. I mean, there should still be really good news that used cars can move, especially when you can bring them down at a reasonable cost. And so sometimes you maybe don't want to move them off the lot for a little bit less, but you're moving more of them because you're coming up with better supply in the used car. So I wouldn't say it's a really bad thing, but there is compression on both the top and the bottom, and it's making it a little bit more difficult to make that margin.
Yeah, we're definitely returning to the discipline of days past.
Yes, exactly.
So appreciate it. I guess before I let you go, you're here with the Economic Insights team. You work with Jonathan Smoke.
I do.
What's the view? Is the Fed really going to reduce the rate at any point in 2024?
Sure. I mean, my crystal ball tells me. No, just kidding. But I'm not an economist. Jonathan is. I don't think anyone can really dictate what's going to be happening. I think everyone's relatively, expecting at least one rate cut. But it's a dicey year, a lot of politics, a lot of things coming into play.
Right.
I don't know that we can count on the interest rate being the big motivating factor to changing pricing for customers. So we're just going to all need to be a lot more creative and smarter about our business decisions.
There's a lot left to be written this year.
Sure.
Right. Really appreciate you joining us. And as I think through our conversation, there were really three themes I think that I want to recap as key trends coming out of Q2. First, on the new car side, we talked incentives and rebates are so important to keep your new car metal moving. Really staying on top of your merchandising game is critical to your new car operations. Second, as we talked about used car, there are still opportunities, right? But making sure you're very targeted and you're using best practices from a trade-in perspective so that you know which cars are turners, which ones are earners, and you're looking at the return on investment for each of your used car investments. And then third, it's back to the basics, right? Executing, operating with discipline, and not holding your breath from an affordability interest rate perspective.
On both sides, right? Dealers are really compressed here with floor planning interest. I mean, if we have high interest as consumers, they have high interest as dealers. So we get that.
Appreciate you stopping by and all the insights. Again, the team here at vAuto and Cox Automotive stand by ready to help you continue to drive your business forward, even in the midst of all of these changes. Until Q3, we'll be back with the events and all the items we see unfolding. But if there's anything we can do in the meantime, please reach out. Thanks again. We'll see you at Q3.